Good evening to all of you. Welcome you to today's webinar. Today we are going to review the performance of Nifty in October and Bank Nifty also, and we are going to look at what probably can happen in November, and let's also look at the strategy that probably or what positions we can take in Nifty, Bank Nifty, as well as in some stocks. Okay, so now we look at what happened last month, and probably we have seen a big correction now, almost a 5% correction. So we will straight away go to the chart. Now let's look at this. This is the high of this month, which happened on 19th October, 18,604, and we have drawn the moving averages, 20 and 50 moving averages, and 50 moving, the Nifty just touched 50 moving average today. So there's a good chance that probably it can get support very closer to this particular level. So let's look at the percentage correction that has taken place till now. So if we go by the close basis, it is 18,500 approximately if we take, and today it is 17,670. 500 minus 17,675, let's say, divided by 18,500. We have got 4.5% correction. So it's only 4.5% correction. So probably it may close at this place and rally, or probably we may say another 1% fall, which could be another 150, 170 points, which could be 17,500. So probably it can come very closer to this particular area, which is 17,400 or 17,532. So good chance that it can come closer to the 17,532 on a close basis, and then from there it can look towards a rally. So then in that case the correction we can consider that the correction is over. But in case if there is a bigger fall, normally we have seen the 100-day moving average giving it support. So we will make this as 100 moving average and see what happens. Because the deeper correction below the 50 can take it closer to the 100, and that is coming very far, that is 16,800, 16,700 to 800. Now in the past, in this particular rally, which started after the pandemic last year, 2-3 corrections of around 9% has happened. 2-3 corrections of 9% has happened. And if you go by the same logic, right now we are 18,500 into 9% correction means probably a 16,835, and that is where we are now keeping closer to the moving, because this moving average can climb, it's a little higher. So we cannot rule out a possibility that in case if the correction becomes deeper, a 16,835. So the two areas where we are looking at it right now are the 17,530 levels or 16,850 levels. I think these are the two levels where probably we could be looking towards some sort of a fall, stabilization, and then probably the rally can take place. Now the reason for this is a lot of brokerages have cut the Indian equities from overweight to neutral. That means because of the valuation, rich valuation right now, and markets have gone up much more significantly compared to any other global market. So there is a chance that probably people are they are looking for some value based buying in other places, and they have cut the from overweight to neutral. So that probably can reverse after a 9 to 10% correction. So which is likely to take right now 17,530 and then going up to 16,850. We have seen in the US indices last month there was a correction up to 5%, which did not happen in Indian market at that point of time. So it has come quite late, a little late after the results have come out for a lot of corporates. So results have been generally good. We have seen stocks like ICICI rallying very heavily, but there is no limit to this one, the valuation. So I think now there is some sort of a correction that has taken place even in big stocks like TCS. TCS has corrected by around 12 to 13% right now, okay, from the top. So maybe another 4-5% chance that TCS also will bottom out, and probably it can start moving up. So some correction has taken place in TCS. So probably another 5-6% of correction is possible as far as TCS is concerned. Now this is the place where the Nifty is likely to come, and then based on the corrective patterns which you have seen in the past, a 5%, 5.5% correction or a 9% correction normally happens. So based on this, we are projecting this. Now that's another thing that we can do is the look at the Fibonacci from this particular level, because this was the last major shallow correction that took place, which was in July. So let's look at the Fibonacci ratio from that particular place onwards. So Fibonacci retracement from so the if that is the case, then the first correction 23.5% comes at 17,845. Now it has fallen below that, and the next correction is coming closer to 17,400, which is this low, which is this particular low. So probably on a close basis, the 17,452 which we have drawn, probably this is a place where it can look towards coming receiving support 17,440, 450 levels, because normally 50 moving average would hold, but doesn't mean that it will exactly touch 50 and then rally. So there can be a day or two of fall below the 50 moving average also. So we should be conscious of that, because there is no sacrosanct, like it should only hold like this. So right now we should look at 17,400, 500 levels as the most important support, from where probably we can look towards some sort of a rally. Now, when will we know that the correction is over? The first thing is, when will we know that the correction is over? For that, it has to break this particular low. See here, this low close is 18,115. So this is 18,115. So the first thing that should happen to presume that this correction is over is Nifty should close about 18,115. So please note that. Now, in case the Nifty the correction which is taking place right now, is corrected 4.5%, and there's a possibility of 1 more % correction which could take it place close to 17,450 to 550 levels. Okay, so 170, 180 points from this could probably take it towards 17,600, which is where 17,500 or so, because it has come a little 17,671. Another 1% correction means 17,500, and that is where we are projecting the most important level of support to come. So if that be the case, then this is a possibility, and for us to know that the correction is over, Nifty should go above 18,115. Nifty should go above 18,115, should stay on a close basis above 18,115. Then when we will know that this correction is over. Okay, so let's probably wait for the Nifty to stabilize, because when the falling market, there's a chance that the fall can get extended, because in this particular week we have seen such a big fall. Right now, let's look at the weekly chart. If you look at it, the weekly chart will tell you. See, this is you have got almost 1, 2, 3, so it's almost closed. Almost 1, 2, 3. So it is closed 3 weeks close, which is below the last 3 weeks close. So which itself is a sign of a good healthy correction. I think it is a sign of a good healthy correction, and we should see that probably coming closer to the 17,450, 500 levels, and then look towards heading higher. So the first resistance now which is going to come will be the 18,115. It should stay on a close basis above 18,115 to get a convincing answer for that. Now, for which we will also look at the moving average back, and let's go back to this as a 20 moving average itself. Now, since it has fallen below the 20 moving average, it has also got to close a little high above 18,000. Say this is coming at 18,030. So of course this low is also 17,970 or 80. But this close, I would put it that way. So it has to close about 18,100 or 115, and that is where the moving average is slowly, probably it will climb a little higher. So we need a close which is definitely above the 20 moving average, and a close which is also above the last low which has been broken. Because normally, if an important support is broken, that becomes a resistance. So we should now have a close which is above the last close which was broken, and the last important close that was broken is 18,115. In the meanwhile, probably we can get some small resistance which could come on this. This is 17,822. So probably we can see some pullback from this particular level. Can probably get resisted closer to 17,822. So let's look at 17,822 as the first resistance, because a lot of these closes are around that place. See, 17,855, 853, 853. This is also 822, 823. something closer to the 17,820 to 850 will act as a first resistance for this rally, for any correction which has happened from 17,671. So we should see some movement above 17,850, which will carry it back closer to the 18,100. But we should wait for the 18,100 to be broken before we really go into the long picture again. But this is all based on a trend following system. This is, you wait for a trend to develop before you go. So that is one way of looking at it. Second, those for investors and those who want to buy and because there's an alternate style of investment, which is or trading, which is based on the counter trend system. If that be the case, I think we should look towards 17,450, 500 as an important level of support. And for those who are investing, I think 17,450 means probably we have got something more than 5% correction. So that's the first place for investment. Second, if it goes a little even further down, which should be something closer to 16,800, 900, that is where your investment should be really coming back. Because if you have already invested in some other schemes, which could be a debt market scheme or could be anything else, where you are not into equities and you are waiting for some sort of a correction before jumping on board for the equity, I think the first important level which you should look at it is 16,800, 900. Of course, this is an intermediate place of correction where you can invest, but 16,800, 900 is a good place where you have to look towards your strongly looking to increasing your investment at that point of time. So this is as far as the Nifty is concerned, and you can look at the smaller time frame also. So this is the hourly chart, and in hourly chart there are 2 hours which have stabilized at this particular level. So we don't know whether a little more fall is likely to come, but we need there are a lot of moving averages in the hourly moving average, which is all pointing out towards the low side. So we should probably wait for some time. Like what we said, this is the same. This is the place. This is the place which we have been telling you in there also. That is this hourly close is 18,022. Daily close 18,100. So the hourly close is 18,022. It's a minimum. It has to break that particular level before we can say that comfortably that the bottom has been formed. So wait for that, and in case if there are, see today it came down and took support at this particular level, which is important, this one, and the next point will be this. I think it may go back to the 17,458. So today it first came and took support here. Then probably when it went up to this level, we saw the resistance coming closer to the 17,884, 885 levels. That's where we are talking about. So 17,900 or so, but in the same hour it closed below 17,850, 853. So this is the important close. And if you look at the, we will remove this Fibonacci, and from the top we will draw the Fibonacci to find out the resistance areas. So till now, 17,982 or 17,982 is a 38.2. 50% is 18,097. So we need something which is above the 17,982, which is around the 18,000 levels. So that is where we said be a little more conservative and look towards daily close above 18,100 to say that probably the correction is over. So those who are following on the trend-based system should wait for 18,100, 110 levels approximately to be broken, because that will be above the 20 moving average. That will be also above the close below which the level was broken. So those two things will get satisfied, and you will have a peace of mind to go there long. But those who are looking for investment, those who are looking for switching some funds which are in the debt market into equity markets also, can use this opportunity of 17,450 partly, and then more so and aggressively if it comes closer to the 100 moving average, which is closer to the 16,800, 850, and which will also represent some sort of a 10% correction from the top. So that is the wanted correction which everybody is waiting for which probably you should look towards that. So this is the this is as far as the Nifty is concerned. So we will look at the Bank Nifty. Now this is okay. This is, we'll go to the daily chart. So Bank Nifty has generally behaved more strongly compared to the Nifty in the last phase of the rally. That gives a lot of confidence that probably the fall that is taking place right now can get supported closer to the 50 moving average, can get closer supported to the 50 moving average. And let's draw the trend line also here. So this trend line is coming closer to 37,300 level. So 37,300 or 450, I think it's a comfortable level where probably we can see Nifty getting some very important support. Right now, Bank Nifty, if you look at it, the close here was 41,200 or this high which is 41,350. So 41,350 and it has now come to 39,000 approximately. So 41,350 minus 39,115 represent like 5.5% correction. So 5.5% correction has taken place already in Bank Nifty. But generally Bank Nifty has a volatility which is more than Nifty. So at least matching that. So if you have a 10% correction, then in that case or 9-10% correction, so we should have something like 3,600 to 4,000 points, which means that probably this is 41,192 minus some 3,600 points, 9%, it comes to 37,600. So 37,600 probably that is where we are getting the 50 moving average. If you look at it, the 50 moving average all is coming closer to that. So this is a place where probably a 9 to 10% correction would have taken place in Bank Nifty, which is a good place to look towards an investment as far as Bank Nifty is concerned. So wait for it to come closer to the 50 moving average before you invest. Now let's look at from the same from the Fibonacci point of view. Now you can do from here, and also we can look at the Fibonacci from here. So it has broken the 23.5% retracement, and the 38.2 comes at 37,405, and 37,405, the 50 moving average 37,500, 600. So there is a clustered support which comes very closer to this. There is a trend line, there is a moving average, and there is a Fibonacci. So I think we should pay heed towards the 37,400 levels, where probably we could look towards Nifty resting for a market again an up move. Now let's look at now if at all Bank Nifty, when do we assume that the correction is over? Now the first thing that has to take place, at least in Bank Nifty, is it should cross this particular high. It should cross this particular high. Now you will have some sort of a resistance which can come closer to the same. See, today the high went to this close which is 39,700 levels. So today's high is also just a slightly spiking high about 39,700. So that is where the first area of resistance came. So first it has to break at least this particular area, which is the 40,000. So we should get a close which is above the 40,000. Now, if that be the case, then probably we can look towards some sort of an assumption that probably Bank Nifty has bottomed out. Now, that will also then be above the 20 moving average. So today it has closed exactly the 20 moving average, and on a close basis it has closed exactly at the 20 moving average. Now, so that means that there is a chance that we could probably head towards the 50 moving average, and many times in the past the 50 moving average, closer to that, it has given support. You can see this place supporting, so this place, so there is support which comes very closer to the 50 moving average. So we a percentage of correction of 10% and Fibonacci of 38.6% retrace from this particular low, and probably the trend line. All these things confirm that we should see some sort of and also this trend line is a flat line, it's not a steep line, so which means this particular line can give enormous support. So expecting some sort of a reversal closer to the 37,500, 600 levels. And so for those who are investing in banking stocks or in any banking index, are looking towards more concentrated portfolio in banking stocks should look towards a further dip from on which basis they can accumulate. So this is as far as the Nifty, Bank Nifty is concerned. And Bank Nifty, let's look at the slightly smaller time frame, which is the 1 hour chart. And in the 1 hour chart, there seems to be some support which came today at this particular low. But if you see this particular point, this one itself is a resistance now since it has broken. But more than that, I think this particular high will serve as a sort of a resistance, which is the 40,000. That's what I said. Closer to the 40,000 probably can serve as an important resistance. Today, after it fell this particular place, it just came and took place. It took support at this particular level. It took support at this level. And from there, when it started to rally, then this particular resistance which was broken, then that became the support. So that became the support. And then after that, it went above this particular level. And after that, we needed to wait for a fall again below this particular low to take a short position. So Bank Nifty, as such, looking probably towards some more fall. So you can wait a little bit patiently. And we need a convincing close above 40,000 to presume that the fall is over. And then so either you can wait and then buy above 40,000, or wait for a fall towards 30,500 and 600 before you add to the Bank Nifty. Now let's look at some of the stocks, which are generally preferred stocks, but right now undergoing correction. So TCS. So this is TCS, and so look at this. This one, there is the high, which is 33.99. Now that is in the verge of being broken, because normally this should have been a good support, and quite surprised to see that this particular level is also broken, and it has broken the 100-day moving average also. So it is now, it should be closer to the 200-day moving average. We look at this whether this collapsed below the 200-day moving average. The 200-day moving average is coming. So this is the important support, maybe closer to the 3,300. So what we have seen is that there is a big correction, that is a big phase of bull market in TCS. It started from this, is over, or probably we started from this place, it just got over right now. So we are looking for a retracement, and since this has been broken, there is a chance that probably this it can just come closer to the 31,032, or probably come closer to the 200-day moving average and rally from there. So here, if TCS takes support at 33.17 or closer to that, the first confirmation that you will get is that some sort of a pattern, that is like a candlestick pattern, okay, where probably you will get some hammer type of formation or a squat bar, because we have already had a look at some of these formations before in other webinars. So closer to this particular place, just have a look at whether there is some sort of a candlestick pattern which shows that there is a deep support coming there. That could come either in the form of a hammer, it could also come off in the form of a squat bar. So if those things happen, then probably you can look towards going on the buy side. Now we will look at a bigger chart for this, because bigger correction has taken place. So this is the monthly chart. The monthly chart this month is a very correct. It went closer to the 4,000 level, and it has come to 3,400. So that means 600 points correction, almost representing 15% correction in TCS. It's a matter of big correction that has taken place, and now it is very closer to this. If you see, we will draw the trend line to see where probably we can have a support which we should be conscious to invest or look towards buying. See, this is the place. Now look at this trend line, because the last few months, that is, we look at from this month 1, 2, 3, 4, 5, 6, 7, 8, and 9 October ending. So in this 9 months, it has not broken this trend line, which is coming this month at 32.15. And next month, if you look at it, it's coming closer to 32.50, 60. 3270. So closer to 3270, very good chance that probably we will get a good support. Very good chance that we will get a support, and we should be looking towards investing there. And let's look at this as a 20-day moving average back to in the monthly chart. The monthly chart, this is coming closer to 2799 or 2800. So I think probably that will be too much to ask for. So let's look at this correction closer to the 3200. Now let's look at the Fibonacci ratio from the pandemic low. This is the pandemic low, and let's look at the Fibonacci correction from there. So one is the area of 3400. Now that is over. The second support that is going to come is closer to 3030. 3030 is the next important support which can come in case if there is a bigger fall. And I think this is a little tough to call for 3030 because it's another 10% fall, which means we will have a 25% correction that would have come. And that's definitely a great level for investment. So normally TCS and all doesn't correct more than 25%. So if it comes to 3030, that means 4,000 to 3,000, 1,000 points, which is a 25% correction. Undoubtedly, it's a great place that will come for investment. So the only way those who are looking for investment should look towards investing something like 32, 50, 60. But in case if there is a deeper fall towards 30, 50, because you will also be looking at some people will be asking how to average it out. I'm only talking about investors. I'm not talking about traders. I'm talking about investors. The investors should look towards 32, 50 or so as one support. And if it falls below that, then you should look at 30, 50 levels where you should have a strong support and look towards buying TCS at those levels, because normally most of the times it will hold on to that particular level. Only in a crisis situation where we can see more than a 25% fall in a big script like TCS. Okay, so I think having said that, there is a slightly bigger correction that has taken place, and either if that doesn't come to 3030, if it doesn't 3250, we should look at some sort of a consolidation, because any big fall, after a big fall, there will always be consolidation before the market takes up. So we can wait a little patiently. But what happens is that if you don't buy 3250, it could end up making you buy 3400, 3450. That is okay for traders, but for investors, I think it is better not to wait for such a thing. Better to wait at 3250 and then 3050 for buying TCS. Now we will look at some other scripts also. Now on a smaller time frame, of course, we have said that TCS is having its own issues right now, and it has come very close to the 200-day moving average, and it has not yet stabilized. And the first point of stabilization can come only if it starts breaking this particular low, or on a close basis, it should trade now above this close, which is or above this close. So I think we should have a close which is above 3480. We should have a close above 3480 before we can say that probably it is look towards bottoming out. Now next supports and all small supports are there. Probably you will have some supports coming closer to this level, 3319 and all. So every day there can be some small close, but it can come closer to this particular low, which is what the 3250 60 levels, and then look towards starting its rally. So this trend line is still holding, and it's a very important thing that we should look towards that. Now let's look at the weekly chart as far as TCS is concerned. Now one thing is that in a weekly pivot point, if it is broken, we should have, I told you last time itself, it is better to get out of TCS around 3710. I think in the last few sessions back, if you go look at it, said very clearly that there's a chance that it may fall below 3710 and it can go to 3400. So now that has happened. So the break of this weekly pivot has given reason to a bigger fall. And so we need to respect that market call regarding its fall. So let's wait and see, because there is a chance that we have completed some bigger wave formation, the Elliott wave formation. If you look at it, the chance that since if it is coming below this particular low, and that means I think probably we have looked at some sort of a correction, some sort of a pattern which started here and it completed a big wave here. So there's a deeper correction that is taking place, and let's see whether it collapses right up to 3130, or even up to 30. This is the 30.04, and this is the 28.80. So chances that probably it could come closer to the 30.40 levels, which is what we have illustrated before. So as far as TCS is concerned. So now we look at the other big script, 2-3 big scripts, ICICI, which has done extremely well. ICICI now this week it rallied on a single day by more than 14%, but it looks as if this particular rally did not sustain and it has a reversal. It has a reversal. Now this particular thing shows that there is a good amount of resistance that has come closer to 860. So I think the stock is very well valued closer to the 860, 870 level. So this particular reversal pattern, which is what that is, it had a higher high. It also opened the gap up this particular week, but the close is not good, which means that we have seen a top which is 859 and 860. And those who have already or who have invested or probably were trading should use any pullback to get out of the stock and then wait for a dip to buy. Because let's look at this this one. That is, this is today, of course, it took some support and went up. But I think this particular level, which is the 820, 820, 821 levels, should offer strong resistance for ICICI. So those who are now it has to now get a close which is above this particular close. Okay, it should have a close above 842 before we can say that the correction is over. So it's better to sell the holdings at close to 820, 821 and then wait for a pullback before you go for a buy. And these pullbacks, of course, this has been this is a very important low as far as ICICI is concerned. So you can look at the Fibonacci ratio from that levels. So 775. Now today it came down to 784. So 775 and then 755. So I think 755 is a possibility that it can come from this 860 levels, which would represent something like a 13-14% correction as far as ICICI is concerned, which is a healthy correction. So let's wait for ICICI to correct closer to 755 before you can go for a long, exit close to 820 and then wait for a fall closer to 755 before you can go for a long. Of course, all the moving averages are much lower on the lower side. So there is a like TCS, fall can also be there after a good result. It's not necessary that the rally should continue. So there is a chance that probably it can also fall like the way TCS has fallen to before it starts to stabilize and rally. So this is ICICI technical view. We look at the Reliance and Asian Paints. So we look at Asian Paints. Because the reason is Asian Paints had a fall because of the margin pressure. And we said very clearly that probably if it rises, last week we said if it rises, it may have a resistance closer to the 3170 and then it may fall and then only we can take a call. Now it has rallied and came to 3170. So any fall which is below this particular low, I think if it goes below this low, which is 3060, would mean that the rally which came from this place to this place, that is a corrective rally and it has got something more to fall. So if it goes a little lower and if it stabilizes closer to that, then probably that could be a place to enter, because here Asian Paints also went up to 3448 and came to 2918, which is more than 500 points fall, which is around the 15% mark, Now we have already said that approximately a 13% correction takes place, 12.5 to 13%, then it goes closer to 23 to 25%. So based on that, I think on a close basis, if you look at 3448 into 0.87, some 12.5 to 13%, it is closer to 3000 mark. Now it is even much below it has come. So it is more than 13%, it's almost close to the 15% correction that has taken place here. So 15% correction is a healthy correction, but probably we have to wait and see before looking at Asian Paints, because there is a chance that it can go a little lower, because we look at the monthly chart and this is it has taken support here. So this is a good support that has taken place, but there is a there is also a possibility that it can go up to this high, which is 2693. So there is, we may look closer to 2700 before the bottom comes, and 2700 probably will represent around 23-25% correction, and that, considering the present margin pressures in Asian Paints because of the rally in crude oil, a possibility of a correction right up to 2700 exists. So wait for a fall closer to 2700 before you go for an investment in Asian Paints. Now we will look at Reliance Industries. So this is a monthly thing, and this month again, if you look at it, let's look at the candle chart. This is a big what we call as inverted hammer, which means that 2750 I think is an important level of resistance. So 2750 is going to be an important level of resistance. The first fall could take place up to this high, which is the 2369. So a fall right up to 2369, 2370 cannot be ruled out as far as Reliance is concerned. Now that has come because of this particular high which has got formed at 2750. So wait for a 2369 or 2370 before you look towards going long and in Reliance. That's from the investment angle thing. Now let's look at the daily chart. Daily chart, there's some pullback. I would say there was a slight pullback, but that came because of this particular low. I think this is the intraday low previously, which is 2500. So when it came closer to the 2500 mark, it took support, and once it started to break above this thing, which is the I think this is 2550, and then after that we have this resistance support which is coming closer to this particular close, which is the 2570. So we'll go back to the bar chart. So so this close. So it had a fall below this close. So which means this particular close now has to be broken, which is the 2560. So the first thing for even for intraday pullback should be at 2560 should be broken. But more than that, to presume that this correction is over, we need a close which is above this close, which is 2600. So for Reliance close, for Reliance correction to have got over, we should expect at least a 2600 to be broken on a close basis before you can go for a long. And now it is heading towards this 2468, which is the 50 moving average, and there's a chance that I told you it's 2370, which is one of the important peaks from where there was a substantial fall towards 1800 levels, right? So that time there was a correction of more than 500 points there also. 500 points represented something more than 20% correction there. So a 20% correction here also could mean 500, 550 points, which means closer to 2200. If not 2200, a 2370 is a possible area, and the next area could come closer to 2200. But 2200 is not what we visualize at this point of time. The present thing is that 2370 in Reliance could be a good level from where bounce can take place. But for the correction, assuming that it does not come up to that level, the forecast is that if it starts breaking 2600 in a close basis, then we can presume that the correction is over. So now Reliance is one of those heavy stocks, and even on intraday, you can look at some important supports and resistances to go for a long or short. See here, the low was 2500. So you can look towards whether there's some support coming at 2500 and you can go for long, say 2502. Similarly, this is a low which is 2550, 60 level. So let's look at the hourly chart. So after it fell, if you look at it, it went up to 25, 45, 46 and started to, because here if you see, this is the 2540. First it came closer to 2540, right? So that is where we said for the 2550 levels approximately, and once that was broken, then it came down closer to 2502. Now 2550, then it rallied up to 2590 or so. So let's look at the bigger thing, 2590, whether there was any this one. So so this is there 25. That's why I said this is the 2600, which I told you, I think it went up to 25.90 today after it broke down. See, let's look at this. So there was a sharp spike which went up to 25.90. After it fell down to 25.40, it spiked to 25.90, which is closer to 2600, which I'm telling you. So it went there and then collapsed. So you can look at even the daily chart to form an intraday opinion about how the markets are functioning. And here, if you look at it, this is the really important close, because one close here was 25.90, and this close is also 25.94. So it went up closer to that levels and started to come down. So right now, at least the first thing that we expect is around the 2600 to be broken before we can look towards some sort of a long. Now, if it starts again breaking this particular low, or if it starts breaking this particular hourly high, which is 25.18, you can look towards going short, keeping 25.50 levels as a stop loss. So that's as far as the even the hourly chart basis is concerned. So you can trade it for intraday also, Reliance like this, by looking at the daily chart, looking at the important support resistance levels in a daily chart, and if one level is broken, then you can look towards the other level as a resistance area. Now in this particular case, we have looked at the hourly chart and taken a call. Now, for example, here also, if you look at it in this hourly chart, though it looks choppy, once it started to fall, now see, there was one, this one, it came like this, then it went up and then came down like this. So we waited for some sort of a correction, if to be assuming the hourly chart to be over, if this particular close is broken, where I am keeping this hourly close, which came at 26.29. So once this 26.29, this is, you see, just 26.25, and then it pulled. So once this 26.29 is broken on a close basis, that is, it is 26.23, and it came closer to that. So very close, 26.30. So once this 26.30 happened, then in that case you can go long, keeping this particular low itself as a stop loss, 26.08 on an hourly basis itself as a place where probably you can put in a stop loss. So this is how you use it. You use your this one also for trading purposes. So now we will look at some other stocks. Let's look at Sdfc Bank, another big stock. Sdfc Bank on a daily basis, okay, it has fallen below 50 moving average. So there are a lot of stocks which are falling below the 50 moving average, and probably this is a very, very choppy thing. So it is Sdfc Bank is generally very choppy even on a daily basis chart. Now there is a fall which is now which has taken place very closer to the weekly place. So now there will be a resistance closer to this high, which is 1635. So HDFC has to rally, HDFC Bank has to rally above 1635 to presume that the correction is over. So right now, normally if you see in the past, HDFC Bank correction has taken place up to the 50-week moving average. So the 50 moving average is now coming closer to the 1495. So we could probably expect 1495, 1496 to be an important support as far as HDFC Bank is concerned. So those who are looking for investment in HDFC Bank should wait for a correction up to 1495.96, failure of which could take it place right up to this particular low, which is the 1382. So the good place for investment is 1495 and 1385 as far as HDFC Bank is concerned. So this is how it is now. The shape of the market is that Nifty is has a chance of correction to 17,500 or 16,800. Close above 18,100 is required to presume that the correction is over. Bank Nifty, probably 37,600 level is a likely possibility. 40,000 has to be claimed back for it to establish its bullishness. Most of the other stocks are trading closer to the 50-day or 200-day moving average. So a deeper correction has already taken place in many of the top stocks, and some more correction of 5 to 7% correction in most of the top stocks is still possible. But when it comes to that, I think we can go on in investment mode. So if you have any questions right now, please ask me. Thank you. Thanks for your participation. Happy weekend. Stay safe. Thank you. Hope to see you on Monday. Thank you very much.